Hi, this is Phil at the Laptop Trader channel. Welcome back to our community. I'm here to share my experience and give back to the stock investing and trading community one video at a time. This video series will cover market cycles, stocks, ETFs, technical analysis, trade entry, trade management and risk management, and how to create confidence by putting the odds in your favor. So good luck. My email contact, laptoptraderphil@gmail.com if you have any questions. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself, then invest in markets. So this month we're at chapter 6. Trade management will be the focus of this training. This month is less about identifying opportunity in the stock markets and more about how to manage that opportunity for success. Must not forget to set yourself up by looking for good risk to reward. Higher potential reward, such as 100%, is better than 10%. A mutual fund is less reward, but less risk than an individual stock in general, which is why it is appropriate for most people. Risk in trade management is about trying to limit risk and maximizing rewards. It took me several years to internalize this concept or approach that fits me and my situation or lifestyle. Not days or weeks. Problems are lack of experience, no track record, time commitments, undercapitalized, especially if you're a day trader. And online ads don't say there are any problems with trading. If you are like me and you have some stock mutual funds that have grown over the years, then you really have not experienced what it is like to lose money in stocks. Work and buy and hold the market that always goes up. So this month we're going to look at 4 companies and 11 charts. So as far as money management goes, I think there are 3 steps to good money management. Some traders or educators will lump all of these under money management. I break it down into 3 categories. The first 2 are before entering any investment or trade. You should have personal or business money management. This will involve having a spending budget and an investing plan, have some goals. But with step 1, you'll develop discipline, be intentional with your money. And the good part is, would you rather have the pain of discipline or the pain of regret? Risk management involves, again, before entering the trade, position sizing for your account size, establishing some max loss or some loss limits, share sizing using risk per share or an R value, using a stop loss, calculating your risk to reward, and having a trade entry checklist and using some basic analysis to decide if this is a good trade for you. And then this month we're going to focus on after entering any investment or trade. So this is, to me, was the hardest part. It's going to take you some experience, some trial and error, and I think it's the secret sauce to success in trading individual stocks. So trade management. Some of the questions we'll answer this month are: where will I exit or take profits? Is my approach compatible with the current market environment? Using all or nothing approach or taking some money off the table, which is better? And what if I stop out? So again, focus this month on trade management. Where will I exit or take profits? Well, we're going to decide that using our charts and some pivot points. Also, when we first calculate that risk to reward, um, that will also help us determine a good exit point on the chart. Is my approach or management compatible with the current market environment? Well, we're not going to know that unless you track your trades to assess your progress. So you're trying to take trades and they're not working for you, we need to take a look at, or you would need to take a look, track some of the trades you have taken, go back and do trade review. That's really the only way you're going to be able to determine, you know, how you're doing is track your trades and then do some trade review. And then if that matches up with the current market environment, then you should be seeing some winners. If it's not matching the current market environment, then you may want to pull back, reduce your risk, or even stop taking trades at this time until the market environment becomes more conducive to your trading plan and your style. Um, should use all or nothing management, or taking some money off the table, taking partials, which is better? So this is again going to be a personal choice, and the market environment will affect this at times, and even something in between may be right for you. So again, you're going to need to track your trades, use a trade tracking system, and some experience will really help you out figuring out um, your trading plan and figuring out your personality and what fits in your lifestyle. So all or nothing is simply where you would make a rule in your trading plan where you say, I'm going to either take, like a 2 hour all or nothing, or 3 hour all or nothing, or something like that. And if you follow that and you're taking good entries and good stops, you should make money as long as you have more winners or losers. The problem with all or nothing is I think it's kind of emotionally hard to do that sometimes. And so, yeah, that depends. That's going to take some experience for you to figure that out. For me, all or nothing um, didn't really work. But I'll share more with you about um, some examples this month, and some of my tracking sheet I'll share with you guys so we can get a look at that. What if I stop out? Well, you'll lose money, but you'll live to take another trade. So good traders, may bat between 30 to 70% winners or higher, depending on their approach and their style. So again, trade tracking and experience using your win rate or your average win or your winning average will help determine how you're doing. So you have to get some experience. What is your average win versus your average loss in actual dollars? This is a key statistic. Big winners will really help out overall with average win and win rate, because you can have a good win rate, but if you're not winning enough money, then you're not going to make much money. So big winners will really help. The problem with that is holding for larger gains. Again, it's difficult. Taking partial profits, I think, helps um, with the bigger winners because it takes risk off the table. But also, better entry also helps. So as you gain experience, when you take better entries and you're getting more experience, you're able to establish um, your targets, and you just get better overall at trading. So, and I'll show you an example of that. But I think the secret to success is figure out that you're really competing more against yourself than competing against the market. So, um, and once you internalize that and you stop blaming others or you stop blaming the market for your lack of success, I think that's when you've really kind of internalized trading. And I think it'll really, once you get to that point, you probably won't need me. So let's look at some examples this month. I picked out 4 for different reasons. First, we're going to look at Orion Company, symbol OEC. This was a real trade that I took. On this one, I exited half lot or half of my position when I got to 2R plus. I believe this trade almost got to 3R, and then I sold half of my position. And then I held half of my position or half lot to try to get a larger gain. Well, then I think it was maybe a few days later I stopped out as the stock pulled back. Long story short, I made money on Orion, and we'll look at these charts. 2 designer brands, symbol DVI. This would be a potential future trade, but when I look at the chart, I see marginal risk to reward. On the weekly chart, it has a bottoming pattern. The daily chart looks okay, but not great. So for me, on that one, I'll show you the chart. I would say not now. I'm just going to keep that on my watch list. And when we look through these, this will, I hope, help you guys to sort and segregate your trades. 3, Elanco Animal Company, symbol ELAN. This one is also a potential trade. It shows on the monthly chart a green reversal bar where the previous month was a red bar. And now price is reversed right back to the upside. Weekly chart looks like a continuation pattern. And then on the daily chart, we got kind of a continuation or almost like a flag pattern, making new daily highs. So on that one, we're looking at multiple time frame alignment, where my bias on that would clearly be higher. I like the risk to reward on that one, so that is on my buy list for this week or this month. So I've got a watch list, buy list. And finally, Old Republic Company, symbol ORI. For me, this was a losing trade. On this one, I actually added to the position. Then I held through earnings. Then we had a price gap down under my stop loss, so I stopped out. And then after that, the stock just moved higher over the next weeks and months. So that was kind of frustrating because I lost money. And, in those types of trades, it feels like, the market is kind of out to get you or the market is against you, right? So let's look at those charts. Well, here's Orion Company. This is the chart um, today after after I had taken my stop loss back here somewhere. That's what it looks like without any of my chicken scratches. This is what it looks like with some notes. When I did a trade review, so yes, I do trade review. Um, we had an entry was back here, and my exited half of the position was up here. I established my target with this pivot, and you could see here there was this wide band of support, kind of like that shape, and then more of a flat support area here underneath this wide red bar. We had a pivot. We had I entered after this green bar formed, and then this bottoming tail bar formed. There was resistance over this area, and as soon as price got over that resistance is where I entered. So this was a breakout continuation trade higher. I established my stop under this area. Later, I raised my stop. And when I raised my stop, that's when these larger red bars form, and I stopped out here. So I exited here half, stopped out 3 days later. And also when I entered, we had a volume spike. So that was my thesis for entering the trade. This is the numbers on the trade, showing my total position of 984.80, my entry price, my stop price. I had 37 cents risk per share using the daily chart. Again, I had a target of 25.50, which gave me the potential trade of 2.37R. So you're gonna have to do some math when you're figuring out your trades, okay? When I exited, I held half and I raised my stop to break even, right? So my entry 24.62, raised my stop to 24.65 for the hope of larger gain. But in between looking for a larger gain, I took profit and I reduced risk, okay? So you guys can study that. Here's what the weekly chart looked like and why I was aiming for a higher target. So major resistance was up here. We also had major resistance here, which was at about 28.50. So I was looking for a higher target of 28.50. And if I was able to hold all of my shares to that second target, I would have realized nice gain and over 10R. If I was able to hold half of my shares to the second target, I would have still realized a nice gain of 5.24R. Again, I had risk per share of 37 cents and a positional risk of 984.80. So right now my maximum position risk in my plan is about $1,000. So I try to keep within those risk parameters. So that would be an example of one where I took profits and then stopped out afterwards, and I still made a profit. Then there's the chart today showing where I exited, where I stopped out here, and now price is starting to move back up. So maybe I would consider a re-entry, but right now there's really no pattern here. I'd have to see maybe some sort of consolidation pattern up here towards the highs. But right now it's just back onto my watch list. I do want to make a comment about that if you have a stop out or you exit a trade, you should immediately put that ticker back into your watch list because sometimes those are the best opportunities, right? So if it was a good opportunity at one point and you stop out, it can become a good opportunity again later on. Don't just throw your ideas in the trash and say, well, that didn't work out. No, you need to keep watching for maybe a re-entry trade. Second, designer brands. This one looks okay on this daily chart because you've got this move down, kind of like that cup, and then sideways consolidation, right? Large green bar, consolidation, bottoming tail, higher low pivot there. And then we've got this bar on Friday, which was a gap up, closed, a closing breakout over all of this. The reason I say this is a marginal trade is because of the risk reward. So between here and up to this area over 1150, it's only about $1.50 worth of void or vacuum, or $1.50 worth of potential. And on this one, you'd probably have to take a stop of probably at least about 75 cents. So it's barely 2 to 1, but the real reason I wouldn't take it is because of the weekly chart. The weekly chart is just still kind of back and forth, sold off after earnings, sold off after earnings. So this one is just going to stay on my watch list. But if it gets moving again up, it's one that I would consider because we do have this open space up here on the chart, or that vacuum area, and that could be a potential winner in the future. But right now, I'm back on my watch list. Elanco is one that is a potential trade now because I had this big move down, went sideways, right? So stage 4, stage 3 to stage 4. Price under the moving averages, then stage 1. And now we're kind of back into an early stage 2. And we have this nice vacuum or void area here to go up to. I like the risk to reward. I like that we had a low, a higher low, and now we've got this red bar in April, and then May was a green reversal bar with a new closing high over all this area. Again, just starting to get above the moving averages. Closing price Friday of 1768 with void up to 30 to 40 bucks. So I like that because that's a potential double plus of your money. Not just your R value, but your actual money. So this one I really like. Let's look at the daily chart. I'm sorry, that's a monthly chart. Weekly also looks pretty good. Showing this pivot low, higher pivot low, green range expansion bar and earnings, and then consolidating for 3 weeks. And that looks higher. Look at the daily chart. This shows that gap up on earnings sideways, where it just looks like this would be the flagpole, and this would be just like the flag waving in the wind, making steady new highs. And I think that's pretty good. Possible trade this week or this month. And finally, Old Republic. This is one that I lost on. I had a losing trade. And this is a weekly chart. This was in a slight uptrend. I don't know, I got in somewhere over here. I stopped out on this earnings week on this big red bar. And sure enough, right after I stopped out, the stock has just drifted higher. So it's not a very fast moving stock, but I'll show you where I stopped out at on the daily chart. Right here. I decided on this one because earnings were projected to be good. It had previous good earnings reports. I decided on this one to hold through earnings. That's a personal choice that you have to make for yourself. Generally, I don't. This one I did, and I got stopped out somewhere in this bar. I think it was around here. And then right after that, just kind of went sideways for a week or two, and then just started moving up. And so that was kind of frustrating to see that happen, but you have to kind of take your stops. If I didn't have my stop loss, what if the next day we had this stock really moved down in a significant way, and I lost a bunch of money instead of losing a small amount. So you have to take your stops. That's an example of taking my stop, and then just putting that symbol back on my list. So let's go over a few examples on my spreadsheet. It's just examples of a trade tracking system to grade your progress. So you can make one for yourself. If you're good with spreadsheets, you can track your trades on paper. You do all kinds of things, but this is the spreadsheet I use that works for me. Let's see if we get that. And here is the sheet. I just highlighted a few of those trades I took. Here's one I took on symbol ORI. Right, I had 20 shares. Later on, I added to the trade. I had 30 shares total. Raised my stop to break even. And then my spreadsheet shows my risk per share, total risk, and total money invested. So this trade was within all my parameters. That was my exit price and how much I made or lost. On that trade, I lost only $21. It looks like I lost a lot of R value, but you got to remember my actual risk per share was only 5 cents, and then the stock gapped under my stop. I lost 21 bucks. Looks kind of bad on the R, but that's misleading. But that was then I have the result stop, and then I just take notes on what I did for these trades. Okay, that's how I track my trades. Let's look at a few more, and then we'll wrap up this video. Let's look at Affirm. This was a better trade for me. Again, not a big trade, 10 shares. This one I gave this one a bigger stop loss. So I had actually $4.32 risk per share, but I still maintain my risk under 50 bucks. I limited my total investment to under 300 bucks. That's where I exited. On this trade, even though that wasn't a very big trade, I made 165 bucks. So risk 43 to make 165. That was pretty good. 3.8 R. So that was a target plus in my plan. And you can see I get those. Sometimes you get several in a row. So that always feels good. Just like sometimes you get several stops in a row. So you're going to have clusters of good and bad trades. I also track when I add to my trades, or if I sell partial positions. Let's look at maybe one or two more. I highlighted, let's see. Here's OEC trade where I had 40 shares. This is a partial exit, right? I had risk of 58 cents per share, $23.20 of risk. Total invested of $9.84. So you can trade any price stock, you just have to watch your risk. So because I got close to $1,000, I couldn't buy any more shares, even though I only had $23 of risk. Normally I like to get up about towards $50 of risk, but because I met my other plan limits, I couldn't add any more shares. But the result of this was still good. I made 52, almost 53 bucks, 2.2 R, exited half. And then the nice part when you do that is I held on to half, raised my stop here to break even. See there we got entry 24.62, stop 24.65 on the back half. And I ended up stopping out, but it was a free trade at that point. So that's kind of some things you can do with trade management is you can create some free trades for yourself, which really gets rid of any stress, right? What else? Maybe I had, these are just a few I'm in right now. Sound symbol and DBI and TPR I'm in now. And then Palantir I just added. So sometimes you won't be sure, which many times is the case, of just how far can this trade go? How many shares should I take to start? I just want to show you this one because you don't have to be embarrassed if you can't buy 1,000 shares or 100 shares. This one I started off with 5 shares, and then I added to that where I have 10 shares now. Same stop loss. I've got my target set. I've got $1.28 risk per share. I'm only risking less than 13 bucks on this trade. I've only got invested under $220. So this is like a quarter position. It's okay for you guys to do that. You don't have to go all in when you're not sure of maybe the risk reward or this. I think this symbol, this PLTR, is in like a bottoming pattern. Sometimes I will trade those. Let's see if I can bring up that chart for you. Because sometimes it pays to get in a little bit early, but if you do that, you don't want to go all in because there's a higher likelihood that stock could maybe gap down. So you can see it's kind of drifting down here on this longer term chart, but it's got some volume interest in the stock, had earnings, and now it's kind of flattened out. It just keeps building support under this like $20.25 area in PLTR, which stands for Palantir Technology. When you look at the daily chart, where that's consolidating, you can see it actually has like a pivot. It's got this gap down reversal bar. They have this big move up on earnings and sold off. So this one is a little bit wild and whippy. But the reason I got into it was because of this triple bottom or triple pivot support. And on Thursday we gapped up, and then on Friday we actually made a higher high and a higher low, even though that's a red bar. So when its price is starting to move up, we've got these moving averages kind of converging, where you've got the long-term moving average moving up, but in the short term it's pulled back. So I'm essentially buying the pullback on this chart, but I'm not doing it in a way that puts my account at risk. So that's why I only took 10 shares. But we've got this triple bottom now, and I feel good about that going forward with my risk and trade management. Anyway, thanks for your support and liking, subscribing, and sharing this channel. Again, this is Phil at the Laptop Trader. Over 1,000 views last month, so thank you so much for that. And we will see you in July. Hope you guys have a safe summer. Goodbye. See you then.